Datadog is a SaaS cloud monitoring and security platform that enables full-stack observability for modern infrastructure and applications at any scale, providing teams dashboarding, alerting, application performance monitoring, infrastructure monitoring, UX monitoring, security monitoring, and log management in one tightly integrated platform, plus 450 plus out-of-the-box integrations with technologies including cloud providers, databases, and web servers. Aggregate all your data into one platform for seamless correlation, enabling teams to troubleshoot and collaborate together in one place, preventing downtime and enhancing performance and reliability. Get started with a free 14-day trial by visiting datadog.com/cloudcast. That's datadog.com/cloudcast.
Cloudcast Media presents from the massive studios in Raleigh, North Carolina. This is the Cloudcast with Aaron Delp and Brian Gracely, bringing you the best of cloud computing from around the world.
Good morning, good evening, wherever you are, and welcome back to the Cloudcast. We are coming to you live from the massive Cloudcast studios here in Raleigh, North Carolina. Aaron, it is the last show of the year. It's also Festivus. Do you have any grievances that you want to air before we dive into this last long show of the year?
I would say the single biggest grievance this year is a little bit of like, and it's going to be a theme for our entire show, AI washing, and we're going to probably call it out in predictions. Right? Everything's AI, and all of our well, I shouldn't say all. A lot of our predictions are AI, but also too, my single biggest grievance of this year is the emergence of AI washing.
Okay. I hear you. Right now, my biggest...
Well, how about you, man? What's yours?
Well, right now, my biggest grievance is not... Well, it has very little to do with tech. It has everything to do with... it has been now 3 weeks that I've been trying to get the title of a car released from probably a really, really old computer system from the bank to the motor vehicle department here in North Carolina. So my grievance is with legacy tech. Just there is a button somewhere. There is a line of code. There is something. That's my... Right now, that is the bane of my existence. So... Well, listen, man,
we can just rub some AI on it and it'll be fine.
That's right. If I put a chat bot on it, I could talk to it and plead for it to please send me the title of the document. Listen, we are, this is the year-end show. This is the year-end review. We're going to do some predictions. There are, in the show notes, we've been doing this for years. I put the last 3 or 4 out there. I can probably put the 17, 18, 19 as well if people want to see, how well we've predicted or not predicted. But sort of last show of the year, we're going to skip, sort of take the last week off or so. You're going to be traveling some. I could use a few days off. But a couple of things before we dive into the second part of the show, which will be the long one. Second year in a row, we've had 2 million listens. So thank you to everybody for giving us 30 minutes of your week, 60 minutes of your week, whatever it might be. Thank you to everybody who's been around for a year or 13 years or however long it's been. So thank you for that. Second big thank you is to all the folks who sponsor the show, and both because they are great people to work with. We enjoy working with them. They make great products. We're very proud of the people that we work with. So real quick, the folks who have been with us literally all year long, Datadog, Cloud Zero, and theCUBE, thank you to them. Huge thank you. Big thank you to Cisco Panoptica, Section, Fix the Internet, Sysdig, Do-It, Eaton, CNCF, Upland Software, Equinix, Red Hat, CloudFix, G-Core, Cosley, every single one of them basically said, we think your audience is interesting. We think they are people who, want great products. And so if you get a chance and you like any of the sponsors, please, reach out, get in touch with them. They make interesting technologies that should make your life a little bit easier in the enterprise space. So those are sort of the two sort of numbers. I know we usually go over all sorts of other numbers for the show. We kind of stopped keeping track of all the VC activity that happened because it feels like the VC activity has sort of slowed down some. We will dive into some VC stuff, but any initial thoughts on the year before we take a break and dive into the big thoughts for the year?
Well, I think the biggest initial thought for the year, and this will be a theme for the show, is this year in some ways almost feels like a transition year.
Absolutely.
And we'll talk about that.
Absolutely. All right. Well, good. Well, listen, we will get to the year in review and our 2024 predictions after the break. Is your cloud bill out of control? Cloud Zero is building a platform that will let you analyze your cloud investment faster than ever before. You'll get accurate, granular visibility into your total cloud spend without the typical pitfalls of legacy cloud cost management tools like endless tagging or clunky Kubernetes support. Cloud Zero is how cloud-driven companies gain more financial control and predictability by driving immediate and ongoing savings. You can answer questions like, how can I save 20% on my cloud bill right now? Who are my most expensive customers? How much does this specific feature cost our business? Join companies like Rapid7, Drift, and SeatGeek by visiting cloudzero.com/cloudcast to get started today. Again, please visit cloudzero.com/cloudcast to get started today. Are you looking to stay ahead of the curve in the latest trends in enterprise tech? Look no further than the Breaking Analysis podcast with Dave Vellante. This data-driven program dives into the most important topics facing the enterprise tech industry today. With a data-first approach that leverages ETR's renowned surveys of IT decision makers and insight from the CUBE community, Breaking Analysis delivers in-depth research on the most important topics facing technologists and IT buyers. Whether you're a business leader, an IT professional, investor, or just an avid follower of the industry, this podcast is a must-listen. Just search Breaking Analysis Podcast wherever you get your podcast and tune in today to stay ahead of the game in enterprise tech. And we're back. And Aaron, a few months ago, I think it was a few months ago, we did a show and we said, hey, we are thinking about making some big changes to the Cloudcast. You remember us doing that?
Oh, yeah, absolutely. And we got a good bit of feedback too, which I think was super helpful in solidifying some of our assumptions and thoughts. And I think maybe, are we going to call it official? We're ready to announce some changes and also some things staying the same.
Yeah. So we definitely got a lot of feedback. Maybe the most feedback we've ever gotten, which is nice. It lets us know that people are listening. People not only care about sort of the format of the show, but I think more importantly, they care about, I think when you find a routine for things and something just becomes habit or it becomes part of what you do, oftentimes you don't want to change, or you want smaller change. And I think we were proposing some fairly big changes. And the reason for that was, we felt like there was a lot of things going on. Maybe we could do a better job covering it for folks. And I think the biggest feedback we got was, hey, some of those absolutely not. And we appreciate that feedback. And others, were more like, hey, maybe some subtle tweaks would be a good thing. So you want to dive into some of the stuff that we got feedback on?
Yeah, absolutely. So first of all, we are going to be sticking with 2 shows a week. I know we floated the idea of potentially going to 3, but I think too, we're just in an era where adding that additional show and that additional time without some kind of significant tweak to the format of the other 2 shows just isn't productive or additive right now.
Yeah.
So that was that one. And then I think the other one too is we talked about, doing video, because a lot of podcasts these days are at least recording over video. And maybe that's just, more YouTube, more potential reach, but at least for our listeners, and we've kind of always had the tagline, we try and keep it long enough for, walking the dog or mowing the lawn or going for a run or something like that. And overwhelmingly, everyone has said, don't add video at this time.
Yeah. I think we also heard, and this was one that, kind of bounced around a little bit. We got various feedback on how long the show should be. We've always said, hey, it should be about 30 minutes. Sometimes it goes a little bit longer, but again, we were always trying to be conscious of the things that you do repetitively. And so that could be, you work out at the gym in the morning, you take the dog for a walk, you have a morning commute. And a lot of that changed with the pandemic. And that was part of the reason we were thinking, well, we're seeing the rise of longer shows, longer form shows. Maybe that would be useful. But the feedback we did get from a good number of people was, hey, there are more and more podcasts these days. I'm happy to, dedicate 30 or 35 minutes or so, for, the cloud technology type of stuff. But I don't know that I want to dedicate 60 minutes or 90 minutes or something. So definitely heard that loud and clear. We are going to move the Cloud News of the Week. So Cloud News of the Week will always still be in the show notes. You can always find stuff that we think are interesting. We're probably going to, we used to always sort of narrow it to about 3 because we would kind of keep what would fit in the opening segment. We've been expanding that. So if you look at the link in the show notes that says Cloud News of the Week, you can find usually dozens of articles and interesting things every week. We're going to consolidate that to once a month, and we're probably going to do an actual show, look at trends, look at some of those things. So, it allows us to make sure that, we're hitting the most timely stuff, but we're also not being completely reactionary to headlines and stuff like that. So we're going to do that.
And I would also add this too, fingers crossed, but not promising anything because, we're still waiting on the new webpage. We might move to a newsletter format for some of the news as well. But that is, again, in the big aspirations for 2024.
We did get a lot of feedback that folks would be open to good newsletters. It does seem like newsletters are becoming a trend again, which is, I say that sort of sheepishly because, the idea of people writing, was blogging, then it was not blogging, and now sort of blogging, but calling it newsletter is sort of coming back. So, good chance for us to, have a closer relationship with the community. So we're going to do that. We are going to try and do a little more kind of focus on what can you do now. So the things that you're learning about are applicable to now. I think we focused a lot on bleeding edge during the last decade or so, even when there was just so much new technology, so much VC investment. I think people are now at the point where they're like, look, I need to get stuff done now. And so we're going to try and skew a little more towards that, a little less on the, hey, what's coming in a year or 2 years. And then you and I are going to do a little more. I think we're going to be not only sort of both involved with, kind of two people on the interview type of shows, but also some formats where you and I are involved and we can dive into some things a little bit more. So those are probably the big changes. Maybe not. So from a listener perspective, still twice a week, still Wednesday and Sunday. Some of the formats will change. We're going to try and give you a little more guidance as to, when big topics, multi-show topics are coming, things like that. So not as many changes as we had proposed, but, listening to the audience and appreciate all your feedback, telling us, hey, do this, don't do that. We like this, we don't like that idea. And so we're going to incorporate that for 2024.
Yep.
Well, listen, let's dive into the sort of the big news. And if you get the show notes, and I always say, take a look at the show notes just because it gives you a sense of kind of the way that we organized our thoughts. I went through and I pulled last year's show notes for the year-end review. And as I was sort of copying them over just to kind of give myself initially a template, I was like, boy, a lot of the things that we talked about at the end of last year, and then we look at them here this year, usually what would happen from year to year for the last 10 plus years is the things were really, really different, right? Like we could go, let's look at 2017 to 2018 or 20 to 21 or whatever. And there was almost no overlap. It was like, oh yeah, those things were a year ago. And this year it feels like, and I'll just run through a few and you can grab a few. It feels like the things that were sort of the big deal for last year or at the end of last year even just sort of have minor updates or have, some interesting updates, but they're still kind of the main topics. And I don't know if as you mentioned at the top of the show, this signals the beginning of a slowing down type of era or just a new era or what it might be. But let me run through the first couple that we had for last year. So we ended last year, unfortunately, second half of the year, a whole bunch of layoffs. That slowed in 2023, but we did sort of begin 2023. That sort of flattened itself out.
And I get real quick on that one too. I read an article just the other day about the tech layoffs specifically, and it was basically January and February. The layoffs in January and February equaled the entire rest of the year. Yeah. So I mean, yeah, that definitely slowed, and that was good to see. And of course, you're going to see some outliers like the VMware Broadcom that we'll talk about next. But I don't think we're quite done yet. But I definitely think the worst is over, which is a very good thing. I'm thankful for.
Yeah, absolutely. Well, and it, I think it accomplished, and I say this, with all sort of sympathy for folks who were affected, but it sort of accomplished the things that the corporations wanted, which was, hey, we had a big run up in the stock price through at least parts of COVID. COVID started to sort of recede. People were like, oh, maybe tech won't be used as much. Tech had sort of realized they had overhired in many, many cases. And we saw sort of the stock of tech in general kind of come roaring back in 2023. So, as much as people dislike that, the ability to use hiring and unfortunately layoffs to dictate sort of financials of the company, people are always going to be the most, probably the most costly asset. Now that might change with GPUs in the future, but it served its purpose from a corporate perspective. Whether people like that or not, that it did what it was intended to do. So let's talk about Broadcom and VMware. So VMware this time last year, VMware was under the impression that like this thing was going to close very quickly. Broadcom had made the $60+ billion acquisition of them. And then this whole year was just wait and see. And where do you see it now? I mean, it just finally closed. It took more than a year to close. Where do you see sort of Broadcom and VMware today?
Well, and in speaking with a bunch of friends that are over at VMware and now Broadcom, and some that weren't brought over as well, I think the biggest thing I see for the next year, and by the way, too, like this is name other companies that say maybe went, big companies that went PE, like Citrix, comes to mind as well. They basically spend the next 6 to 9 months figuring out what to do and how to do it. Who's brought over, who's not brought over. I just think there's a lot of inefficiency as they kind of reorganize the house and move forward into the Broadcom era. None of that happens overnight. And that's not, that's not a knock against VMware. That's any big acquisition like this is going to have a little bit of chaos and settling back down period.
Yeah. It feels like there's going to be 3 or 4 conversations that everybody's going to talk about with VMware. One is going to be, they sort of, they did a whole bunch of big layoffs. That seems to be mostly done. Again, we feel for anybody who was impacted by that. It did seem to be signal that was definitely coming. So I doubt it surprised anybody. That was, Broadcom have been talking about that since they initially, talked about, how much revenue per employee they expect it to be, right? The second is which products are going to stick around and how much investment will they make in innovation. And so it seems like they've made their first pass at, look, these are the products that are sticking around. It seems like it's very much the core infrastructure products. They're, VMware Cloud Foundation or VMware Foundation, right? Yep. Which is that. They've already started to sort of at least signal to the market that certain products aren't sticking around. So virtual desktop VDI and some of the security stuff is sort of out. So they're going to have a lot of conversations with people about, hey, what about things like Tanzu and other stuff that doesn't necessarily fit in core compute storage networking? Like you said, if it's a year, it'll be fast in terms of how do all the internal reorganizations happen? How do all the power struggles happen? How do new things work and all that kind of stuff? If it's a year, you've been through some of these. I've been through some of these. Like a year would be unbelievably fast. I'd be surprised if it doesn't sort of drag on for 18 months to 24 months. That seems fair. To be pretty normal. And then the last piece is obviously it's going to be all about pricing. And you and I were actually having a conversation before we click the record button. They have already announced they are moving from perpetual licensing. Perpetual licensing goes away. Everything going forward will be subscription licensing. And in most cases, that drives up the cost for customers, right? It drives revenue for the business, but it also drives up the cost for customers because they're being asked to pay more on a more frequent basis. And so that's going to have the downstream ramifications for the rest of the market to go, oh, maybe, and people are skeptical about this, but like maybe, VMware will now price itself out of owning the virtualization market, and other options, other alternatives might have a chance to come in. And you're starting to hear those stories a little bit around the fringes, like, oh, so-and-so is considering moving and so forth. But that's, to me, those are the 4 biggest things that everything is going to kind of get written about for the next year with VMware and until revenue numbers start to come out and stuff.
Agreed.
So next,
let's talk about chips, which is something we haven't talked about in a while. Chips are cool again, right? Yeah, like silicon's cool again.
Lots of hard. Well, and I don't. You keep up, I think, this a little more than I do. I feel like there's, the x86 race is kind of gotten, again, more commoditized. It feels like it used to be Intel, all Intel. Intel's kind of in weird financial situations now. Pat Gelsinger has a lot on his plate. ARM seems to be growing, but then it can't necessarily figure out, if it's its own independent entity. Is it going to go IPO? So the future of ARM as an entity seems strong, but the future of the company ARM seems somewhat undecided. And then there's NVIDIA.
Yep.
There's NVIDIA. How are you thinking about all the chip stuff? Because there's both all the financial stuff, which is going on, but then there's a lot of really super powerful technology going on.
Yeah. So, well, I'll talk about NVIDIA first. I definitely see, because everyone kind of knows, like, it's almost a single threaded bottleneck that all GPUs right now go through NVIDIA. And this goes into our, what will be our predictions later on. That can't be sustainable forever, to have one company with all the big GPUs. And so you've got, Intel coming out with stuff. You've got AMD coming out with stuff. You've got other technologies that, aren't necessarily as dependent on GPUs. And so NVIDIA is absolutely the belle of the ball right now. But I just think the industry in general starts to move away from NVIDIA specific GPUs. That doesn't mean they move away from GPUs, but I think you will start to see more purpose-built things. You'll start to see other entrants into the market. I don't think NVIDIA's dominance can last forever. And it's not because they're a bad company. They're a fantastic company. It's just simply because supply and demand will outstrip any one company.
Right. Yeah. It's and we'll put a link in the show notes. You turned me on to I think it was the Acquired podcast.
Mm-hmm.
Huge series. I finally got, I literally, the only time in my life I listened to like a 3-hour podcast. It was all about, kind of the ecosystem of NVIDIA, how they kind of got where they were. There was a couple of follow-ups with Jensen Huang. Fascinating stuff. Like you said, it's really interesting because they've built a humongous ecosystem around it, right? They're not sort of like an Intel or an AMD is, where they mostly are building just the hardware. They've built a software ecosystem around it. They've built a networking architecture around it. Essentially sort of an entire data center kind of system around it, the ultimate lock-in, if you will. But it's really interesting because I look, last year we were talking about NVIDIA in the context of, they tried to make a bold move to try and acquire ARM. It fell through. It didn't meet all the regulatory stuff. And then, because crypto essentially collapsed over the last year, and they were able to write off all of their assets, all of their hardware assets for the year. And then ChatGPT comes along and everybody wants GPUs. They get this massive, at least financial gain. And all of a sudden, they look, Jensen Huang is showing up as the superhero at every single keynote. It was an amazing 12-month turnaround, just in terms of headlines, not in terms of their whole strategy. But last year we weren't talking about them as the choke point for AI. We were talking about them as, oh my God, they didn't make it. ARM fell through. So does that leave them a hole in their strategy? Unbelievable how much how much one application can change. Somebody else's application can change your destiny.
Yeah, and we usually talk about the hyperscalers, and we'll probably talk about those next. But NVIDIA, I think, if we're going to give out informal awards here, NVIDIA gets the award for, single biggest movement in a 1 year period, next to maybe AWS in the early days, right? Yeah. Like as far as impact on our industry.
Oh yeah. They win MVP, Player of the Year, all those sort of comeback Player of the Year. They win all the awards for this. Speaking of the hyperscalers, I can't remember a year. No, we just recorded a show that will come out before this one about sort of Microsoft's involvement with OpenAI and some stuff. But I can't remember a year when we talked less about non-AI stuff with the cloud providers. It felt like the cloud providers, they existed, they grew, their growth rate for the most part across the board was lower than it's been for a while. Congratulations to GCP. They are now finally profitable, at least by a small margin. So, that was news, but, in general, it didn't feel like, at least on mainstream cloud stuff, that the cloud providers made a lot of headlines this year. I mean, did you feel that way this year? We didn't, I mean, their numbers are where they are. I mean, Amazon, AWS is almost $100 billion revenue thing. Azure, by our best guess, is roughly 65 billion, give or take when they do accounting, and Google is like 34 billion. So they're, it's sort of half as big as the next one, to the next one. So, I mean, there's clear distinction, but it didn't feel like people were like, oh, wow, what outside of the AI space.
Yeah. Well, I'll add this before I go into more. It's amazing to me that it took GCP 34 billion to break even.
Yeah. Especially given that they love to talk about, hey, we're built on top of the Google infrastructure.
Right. Like that to me was I just wanted to point that out as like the things that make me go, wow, okay, really. Yeah. But it also gives you an idea too, in this cloud space, like why are we not seeing necessarily anyone else, or why are we not seeing big movement year to year? Like it, in the early days, we'd be like, oh, so-and-so's first and so-and-so's second and so-and-so's third. And they're, and then it kind of solidified over time. But I don't know the last time we've ever seen major movement in, say, the top 5.
No, I mean, Oracle has done a few little things to sort of, I mean, they've probably climbed up the ladder the most of anybody, from sort of non-existent to sort of existent. And I feel like they've done that by some, big headline stuff, right? They're the only ones willing to sort of cut their prices on networking, or, they're trying to buy TikTok's traffic or whatever it was. But yeah, I mean, now that you mentioned it in the $34 billion category, like I think back to that series of shows I did the last few months about sort of the history of the cloud eras. And I think AWS, and I'll have to go back and look, when they first announced their numbers and then them being profitable and so forth, I want to say they were maybe like $3 or $4 billion, maybe $4 or $5 billion, and they had made like their first $1 billion in profitability, right? And so it if you think back on that, you go, oh wow, they only needed like $5 billion to show a profit on it. But as we think about it now, right? Like the biggest thing from all the cloud providers amongst any news stories was how every single one of them, in their earnings statements to the street was like, all of our customers are optimizing. Essentially, every one of our customers is cutting costs, and they're trying to optimize the cloud. And I guess if I think back on it, as much as Microsoft or as much as AWS talked about like, hey, we're all about builders, a lot of their kind of accelerated growth wasn't so much that they found the next, superstar, consumer SaaS company. It was like people are just lifting and shifting VMs into the cloud, right? They are leveraging infrastructure services that are the same repetitive stuff, without any concern for how to do it. And so AWS was able to be highly, highly profitable on infrastructure. And the other ones just didn't either have the scale or couldn't do that. And they were trying to become profitable on app level services and the customizations that go with that and all that sort of stuff. So yeah, that first mover status was super important.
Yeah, agreed. And while we're talking about AWS, let's talk about Atom for a little while and the changing of the guard. Yeah. For me, it's super interesting. And we actually talked about this on the last show with Brandon, how different it feels these days. And maybe this is part of this larger transition trend we're talking about right now. This really does feel like somebody that was brought in. It almost is a little bit like the Apple, when Tim Cook came in kind of thing. It's like, hey, let's get the operations folks to come in. Let's get the folks that are like not going to shake it up too bad. Just, get as much profit about it going forward. And then all of a sudden AI comes along. And is Atom the right person for a big shift in the market and a big shift in their offerings? I'm not picking on Atom, anybody. Like, I just think like they kind of picked a CEO because they kind of saw this, peacetime coming, if you will, and this time to like, hey, we're number one and we need to now really just work on getting better margins about all of this stuff going forward. And then AI kind of upended the market, and I don't think they saw that coming.
Yeah, no, I would agree. I think I talked about this on one of the earlier shows. I mean, like you said, the leader of the organization always gets gets more kudos than they deserve, and they get more blame than they deserve. But that's the nature of being in the big seat. I think you're right. I think it feels like to a certain extent they had an incredible run as the innovator, and while they still innovate and there's still stuff that comes out. When I look at the list of like new capabilities that pop out from AWS, it feels very much like, kind of what they call the old guard. Oh, it's a lot of just, incremental features on top of the things that are pretty stable and make a lot of money and do well. And that's fine. But yeah, I mean, there is distinctly a difference between being the leader who has operational expertise and being the leader who is, somebody who has experience taking risk and being an innovator. And, again, I don't know how much of that's on Adam. I don't know how much of that is, Andy still plays a role in kind of shaping where they're going. Amazon, big company Amazon has its own share of challenges that I'm sure take up lots of Andy's time. But yeah, it just feels like a very different company than, even 2, 3, 4 years ago. But it definitely has felt different since he's been there. And again, how much of that he's influenced, how much of it that's the nature of the market, I don't know. But yeah, I mean, it felt very flat-footed with with AI, and it feels like, at least from some of the rumors you hear, they are trying to spread it on everything, and it's not necessarily jiving with people internally.
Agreed. Yep.
We had a note in last year's thing. We said, between text and images, AI seems to be making a big leap. Right? This was,
and that was 1 month into OpenAI and ChatGPT coming out, right? Because we recorded in December, and ChatGPT was like a couple weeks old.
Right. Yeah, that was there, and then sort of like DALL-E and Stable Diffusion was sort of popping up like on the iPhone, and we were like, oh man, there's some stuff going on, and then ChatGPT just, explosion. Every single day, you see, there's 10 new startups that are doing a thing, and that. That in and of itself, it will be very interesting, because it does seem like we have not yet begun to see the culling of I'm just an app on top of their API, right? Remember the way we used to go to reInvent, and the joke was always like, I can't wait for the reInvent keynote to see how many of these platinum sponsors won't be around next year, because AWS is going to, it does feel like that's going to be the case. With these platforms, right? Like, we kind of expect OpenAI is going to do this to their ecosystem to a certain extent, just like AWS did. And that one's going to be very interesting. But yeah, it's amazing how quick it's flipped from that ecosystem to this other ecosystem.
Agreed. Absolutely. And the other thing I would add to that is, and we kind of mentioned it when we said text and images, but like the whole concept of multimodal.
Yeah.
That is, going to be the single biggest thing going forward. And yes, you see demos. Some of the demos may have been faked, looking at you, Google. But some of the multimodal stuff going forward is going to be the next big area. It's going to be super interesting for this year.
Right. The last one I'll hit on the like, hey, last year feels like this year, and then we'll dive into sort of what was new this year. I have in the notes, Docker 2.0 is making money. And now if we get to the end of 2023, Docker 2.0 is back to taking money again at a $2 billion valuation. Remember when we used to talk about Docker in the $1 billion valuation, and we're like, I hope they take that offer.
Yeah.
I kind of have to wonder.
If we're giving out awards like we did for NVIDIA, Docker gets an award.
Oh yeah, come back player of the year award. The fact that they've whatever their actual revenues are, I think they're now claiming ARR of like $100 million. On what feels like Docker desktop for the most part. At what's apparently like a $5 a month thing. If I guess to a certain extent, like, that's awesome, because it sort of says there are enough developers doing stuff with containers that it's become mainstream. Like, if you're at $100 million ARR, no, you're not the next Microsoft. Like, you haven't, dominated the Office market, but that's a lot of money for a developer product. that seems to be growing enough that people are investing at you at a $2 billion valuation. So I feel like there's goodness in that in terms of like containers are probably becoming pretty mainstream. And at the same time, I'm sort of like, oh, Docker, haven't you seen this movie before? Like, do you really think you want to be a X billion dollar valuation? Do you remember what happens? But it doesn't feel like this time they really have to deal with the community. It feels like it's just like, yeah, we're just Docker and we have our own Docker software, but it doesn't feel like they have the same kind of conflict with the community they had back when, it was Solomon and a $3 billion valuation.
Yeah. So. Yeah. And that's something, that remember that thought when we talk about HashiCorp.
Yeah, absolutely. Well, listen, let's dive into the what's sort of new for 2023. And for anybody who's listening, again, I'll give a plug for Cloud News of the Week. Most of you probably just skip it. If you probably hear Aaron do Cloud News of the Week at the beginning of shows. In the link of the show notes, which will be in your podcast player, whichever one you use, there will every week be a thing that says Cloud News of the Week. And if you click on that, not only will it show you the things that we're typically talking about, but we just keep it as a running document throughout the year. And actually, we've been running it for many years. So if you ever want to go back and be like, hey, let me do my own summary of 2023, go take a look at Cloud News of the Week. It will give you tons and tons of stuff to look at. And if nothing else, it gives you a good sense of like, oh, okay, how much changed throughout the year? How fast did things change? What were some of the things that I didn't even know happened? So good resource if you're trying to catch up on stuff or do research. Aaron, what do you got for 2023? Anything interesting happened this year?
Well, I don't think it's a surprise to anyone. And actually, we probably don't even need to talk about it all that much. But hey, guess what? AI happened.
Yeah.
This year. But I will say this. It was interesting to me to relate the next topic together with it. It was interesting to me how quickly crypto cratered and how much of the rise of AI was, of course, ChatGPT, but how much of that was also you had a bunch of VCs that needed somewhere to put some money and crypto was imploding. And like, how much of that is just like the complementary one fell off and the other one rose to prominence. Like I'm still not, I don't want to say it's AI washing, but I will say it was amazing to me how quickly the VC markets kind of very quickly pivoted from one topic to another topic.
Yeah, I feel like timing wise, it's easy to connect the two of them together. And so the things we have in our notes, 2023 was the year of AI. 2023 was the year of crypto goes to jail. And so it's easy to, I think it's easy to sort of say, oh, you can connect the dots on those things because both of them were, super compute intensive types of things. They were using GPUs. I kind of feel like that's just coincidental in that two things. One, you're right. The Silicon Valley fell in love with the idea of we're going to reshape the economy as they like to do with everything. They want to sort of reshape the world. That sort of blew up in their face to a certain extent. They sort of deserved it because they were the hype machine for that thing, right? They were creating the hype. I feel like the AI thing has been in the making for 10, 15, 20 years. And we just now, part of it is, some of the technologies evolved, like we talked about on the AI show, like the transformer paper and how large language models have sort of evolved. But, companies like Google and others have been hoarding data for a decade now. They've been hoarding data scientists for a decade now. And somebody just finally put a user interface on it, right? Like,
yeah.
I mean, to a certain extent, it's a little bit or a lot kind of like the iPhone moment, right? It wasn't like people were like, oh, mobile phones. It was like, oh, no, computing in my pocket with an interface that's useful, right? Like you put the internet in my pocket, not a mobile phone in my pocket. And I feel like ChatGPT was, oh my God, you put an interface on this thing that was, a back room, complete black box. Nobody has any idea what it could be used for. It's only useful if you know the right Python syntax to do whatever. And it was like, no, the user interface is English and pictures and, put a napkin in front. Like that to me was, 15 years in the making, 20 years in the making. And it just so happened to happen as soon as the crypto stuff blew up.
Mm-hmm.
But
Yeah.
it wasn't entirely dependent on Silicon Valley VC money, at least the same that was going after crypto. Those guys just all went scurrying because all of a sudden it was like, oh shit, crypto's screwed. We need to go over and be on this next wave.
And also too, like we've talked a lot about ChatGPT and OpenAI and Microsoft, and those are definitely big topics for this year, but we kind of covered them on the previous show. So I wanted to skip ahead and let's talk about some of the non-AI big things that happen. Cisco bought Splunk.
Yeah, $28 billion. That's a $28 billion acquisition that, what did it get? 1 day of run, 2 days of run in terms of headlines?
Yeah. And I mean, it's amazing to me. I mean, one of the biggest acquisitions of the year, and it was kind of a blip, right? New Relic got bought for $6.5 billion. Also, again, like barely made the news.
I mean, let's put those in perspective. So $28 billion, Cisco buys Splunk. IBM bought Red Hat for $34 billion. That got talked about for months and months and months, right? New Relic got bought for $6.5 billion. Microsoft bought GitHub for $7 billion.
Yeah.
Right. So, everything's relative and, you can talk about inflation, but I don't know. It was interesting that those two things, and I guess maybe it's because people aren't that enamored with observability and monitoring, but God, there is so much money in that stuff. And it's essentially sort of the consolidation of those markets, although not under one company. Although Cisco now does have several monitoring and observability companies, but interesting to see that chunk of the market, keeps trying to compete against Datadog, and they do well enough to be valuable, but none of them have sort of overtaken Datadog.
Yep. And it's amazing to me how do I put this? I don't want to say undervalued because that goes to like a financial value, but underappreciated this segment of the market is, for the folks that are out there, how big of an impact this category of software makes in day-to-day operations throughout the world. It's just amazing to me. Like, again, it's that non-sexy stuff, but here we are, it is getting some big prices.
Well, and it also highlights, so you and I joked around to a certain extent, as we were talking about some of the future of the Cloudcast stuff, certain aspects of cloud have just sort of become a feature, right? Mm-hmm. Like it used to be, it was this huge monumental change and cloud was this radical thing. I mean, if you think about it, back when you and I were sort of doing operation stuff, which has been a little while now, you didn't store everything. You didn't log everything. And nowadays the price of storing data versus the ability for you at some point to use that data to unlock insight, value, time to market, whatever, the economics of that have changed so much. And part of that's just because the price of like cloud storage or S3 compatible storage or object storage is so cheap that, these companies are now ridiculously valued because people just have said, log everything, store everything. At some point, we'll run some sort of intelligent application on top of it, but don't think twice about storing too much, at least to a certain extent, right? We have seen the people saying like, look, I'm only storing 3 copies of my Snowflake in terms instead of 5 copies, but they're not saying I'm not storing any copies. They're just like So that to me is another one of those sort of inflection points of like, super cheap cloud scalable storage is now just a feature. It's not it's a feature of some bigger system.
Yep. Agreed. Let's talk about one more big trend before we get into our predictions. Let's talk about HashiCorp, and not just about HashiCorp specifically, but the ramifications of, is this another potential transition with licensing models for open source going forward? What's your thoughts on that?
Well, I think it's the thing I've talked about, a million times. Like, whenever there's economic changes, they always seem to be impacted by, interest rates and stuff. And I think we went through a decade of literally zero interest rates, which meant that VCs had nearly unlimited funding. They funded a ton of, people who had started an open source project, wanted to commercialize it. They would give them huge, long runways to figure out, could you figure out a business model? Forever and ever, we heard people say, well, you could do the Red Hat model, but nobody else can do the Red Hat model. And so, they dragged on being an open source company. And this isn't HashiCorp specific, but they dragged on being an open source company, trying to figure out, how do I monetize this thing? And some of them did, and some of them went open core, and some of them, that worked in some cases, and some cases it was. And Hashi just said, nope, we're changing it. We're not going to allow the cloud providers to compete against us, and we're going to completely change our model. So yeah, I mean, I think to a certain extent, it is a tipping point in how companies that we thought of as open source would monetize themselves. I don't know if it's going to be the tipping point, or if it just happens to coincide with the fact that we just ended a decade of basically free money, and you didn't have to be as kind of rigorous about your business as maybe you would have when interest rates are 4 or 5 or 6 or 7% or whatever is kind of normal in most normal times. So I don't know. I mean, I think HashiCorp is going to be looked back at as sort of the ultimate bad guy in this thing, not because they changed their model, because plenty of companies have done that before. I mean, MongoDB did that, and people don't chastise them. But their CEO came out a bunch of times, whether it was intended to be leaked or not leaked, and he was just basically like, "Yeah, we plan to bait and switch everybody. We've been planning this for years. We're just going to pull the rug out from underneath them." And for that, that's sort of unfortunate, because all the good work that Mitchell and Kevin and Armon and all the folks at HashiCorp had done for years essentially just gets trashed immediately.
Yeah.
That's unfortunate. I saw that Mitchell officially announced he was moving on from HashiCorp, and hopefully doing the thing we always say, which is like, when you make a lot of money, go off and find a beach. You don't need to start another company. Go find a beach. And from what I understand, he's finding beaches and planes and doing fun stuff. But Hashi will be a cautionary tale of, you have done a lot of damage to the open source community of sort of trust for, that's going to be hard for the rest of the community to deal with.
Agreed.
So, I don't know. It's a complex issue, man. It does come back to the ultimate question of like, okay, Red Hat figured it out, and whether people like Red Hat or don't like Red Hat, whatever, Red Hat figured it out, and everybody has just said you can't follow the Red Hat model, but yet nobody tries to sort of follow the Red Hat model. So it's, I guess you're a unicorn because nobody else believes you, but yet you still make more money than anybody who's tried any other model. So it's that will be the great kind of question of open source to monetization.
Agreed. So. It's a good point.
I don't know how to explain it any different. Yeah. I will say this. I did hear a really interesting podcast. The folks Oxide. I don't know if you've heard of Oxide.
I have not.
Oxide is a bunch of former Sun engineers who eventually became. Do you remember Joyent? First, there was a sort of a small cloud provider called Joyent. So Brian Cantrell and a bunch of
Ed Sipich and
but most of these guys are like the people who invented all kinds of cool Unix stuff at Sun. And then they took that and they built Joyent, and they've built a lot of cool stuff, but it's always been kind of their own semi-proprietary flavor of the stuff. Anyways, long story short, Oxide is a company that a few weeks ago they've been trying for multiple years now to basically build what they call a cloud computer. So think of it like this way. You'll understand this. Imagine that when VBlocks came out, for those of you who remember that, except the software on top of it wasn't all proprietary. It was all open source. But the hardware components and how you operate it was all kind of one gigantic system. So they built that. Anyways, long story short, there's an interesting podcast they had recently with Adam Jacobs, and both sides were sort of arguing can you commercialize a company? And Adam Jacobs is famously the guy who started Chef. We recently had him on. He started a new company called System Initiative. Adam is the only person I've seen who argues that like the Red Hat model works if you would follow it. And everybody else on the podcast is like, no, that's crazy. It was unique. It never can happen again. So if you're interested in a long-winded conversation about it, I'll put a link in the show note.
Nice.
So
nice.
Well, listen,
let's do some predictions, man.
Yeah, we've been going for 45 minutes. You want to go first? You want me to go? Well,
yeah, no, absolutely. I'll go first. Yeah, we'll go back and forth. So my number one, and it's interesting because we're talking about hyperscalers. We're talking about hyperscalers and their lack of placements, and we're talking about how much money it becomes to be profitable. I think at some point you can't have the natural S curve and these categories of these hyperscalers and the big cloud providers. I don't think it can last forever, and I think at some point we're going to start to see somebody throw in the towel. That's not number one or number two, obviously, but we're going to start to see the lower end of that market start to divest.
Yeah, it'll be interesting. We've said for a long time, like, is GCP really something that Google should be in? Like on one hand, you look at it and you go, gosh, they know how to do lots of technology. But at the same time, like, yeah, how long can you be number three, especially if you spent $34 billion getting to profitability, right? Like no regular business would ever have that happen. It is going to be interesting. I mean, I guess the one ace they have up their sleeve is they're still pretty good as far as we know at AI, and maybe AI is the next trend. So So I think that's always a good one to put out there as like, can the world sustain? I mean, because in most categories you can't sustain three, right? We always say like there's a best, there's a fast follower, and then there's sort of this long tail. Can it sustain three? I don't know. We say it every year. We'll see how much money Google really has.
But I just think with a combination of like, hey, lots of folks want GPUs. GPUs are expensive. Building out that at scale, combined with interest rates, like we've talked about many times. I just think it's I think it's time that patience is going to be running out for some of the smaller players in the market.
Oh yeah. No, if you're beyond that three, it's going to be tough, especially now that interest rates are higher. Yep. My first prediction, pretty simple one, is I think, so this last year we allegedly had 100 million people using ChatGPT. I think we're going to see the first 500 million user service, and I don't know that it's necessarily going to be ChatGPT. I think there will be yet another one, and I don't know that it's necessarily going to come from OpenAI. I think this is going to be the year we're going to see, the sort of Instagram of AI applications, right? The thing that just they figure out some human emotion, some human sort of basic thing, and they're going to figure out a way to put a cool AI interface on it, and it will sort of take off like ChatGPT did.
Yeah, that makes sense. I mean, it is a little bit of like evolving and taking that chat prompt and taking it to the next level and actually turning it into some kind of application that is using, if you ever read the book Hooked, the Hooked product philosophy of, always trying to get attention and some of these other things that, some of the companies have done very well, and sometimes maybe not to the betterment of society over the years with social media. But think of a combination of AI and Instagram is definitely something to consider.
I think both of us have the same sort of thing next on our list, which is we think, whether it's through compact models or open source or specialized chips, I think we both expect to see some sort of interesting shift in the economics of how AI is delivered. Right now, it's largest of large language models. We keep hearing about bigger ones coming out, and then super dependencies on GPUs and super dependencies on high end networking. I feel like, and you've mentioned it, I've mentioned it, like that can't continue forever, right? Like every trend in computing has always broken through a lower economic price point to get to mass scale. I feel like we're going to have to see that happen pretty quickly.
Yes. And I'll add to that too. Yeah. You look at where the new models are advancing, we're already starting to see a slowdown. And as far as, training on more and more parameters, you're starting to see a slowdown. It's just, it's everyone now understands conceptually how we had success with the first one. Now I think the optimization stage of everything kicks in.
Yeah. Yeah. Last one I've got, I'm going to kind of combine two together. We went through 2020 through 2022. Everything was, hey, every week is, hey, new company gets funding, new company is a unicorn. Funding rounds are going to be even more difficult, especially if you are not AI centric, right? Like we've been talking about that for a little while now. I think we are going to see, 40, 50, 60 former unicorn companies get acquired. And I think they're going to get snapped up. I think a lot of them are going to be wrapping some sort of AI capability around their product, right? Whether they were intended, they could be a service mesh company or they could be a security, software supply company. They're going to wrap some sort of some sort of LLM similar to like, I've seen Honeycomb do this. I've seen Ansible, Red Hat Ansible do this. I've seen, a bunch of companies doing this. They're putting, an AI feature on there to make their product simpler. I think that's going to be the catalyst for a whole bunch of them getting acquired at very, very low values. They're going to be fire sales. But every one of these, the announcement is going to be something about it's improving our AI strategy. It fits into our AI strategy. So it could be an HP buying them, a Cisco buying them, an Oracle buying them, whoever it might be. It's going to be a lot of these unicorns, I suspect.
Yeah. Consolidation continues.
Yep. Well, listen, man, we have been going for a while. I know you have to jump to do some day job stuff. Any last minute thoughts for the year? Any last minute thoughts thinking about 2024? Any of those sort of things?
I think the biggest thing for 2024 is watching the consolidation and the optimization on the cloud front, as well as where the AI stuff is ultimately going to go. Because I do think the AI stuff is super early on. And I honestly don't think we've hit, even though ChatGPT and, chatbots and all these other things has become the primary use case that everyone points to as the example. I don't think that's the business case that enterprises are going to use to make money. Yeah. And so I think, it will be really interesting to watch AI in the enterprise and in businesses, what is actually going to be the use cases going forward that is worth building a business around. I'm not convinced or I've seen anything that I think is happening in that front yet.
Yeah. Well, and things change super fast. I think mine is going to be, several years back, Gartner came out with something that got kind of panned by the industry, but it was called bimodal IT. And it was the idea that there is a bunch of interesting new technologies that are going to allow you to apply technology in new, faster ways, more agile ways for your business, right? Go, build microservices. That was kind of, that was the idea. But you're also going to have to maintain the systems, the sort of legacy or heritage or whatever people want to call them that run your business, the day-to-day back office stuff. And so they basically said, here's this concept, we're calling it bimodal IT, and essentially said you're going to have your fast stuff and you're going to have your slow stuff. And it got panned because people said, well, you don't want to bifurcate the people in your organization. You don't want to tell them some are new and some are old or some are important or some are not important. I think we're going to see that come back. I think the nuance in that is going to be every business is going to say, look, I need to rub some AI on some important business applications I have. And it's going to force everybody who's responsible for the day-to-day operation stuff. So monitoring and networking and, software supply chain or whatever to sort of be on that same team. So you're going to have the fancy, shiny projects, but you're going to have to bring along the, know-how of how to do plumbing and how to do security and how to do all that stuff. So, I'm hoping as people are thinking about this or they're going, hey, we're starting an AI project, they're not making the mistakes from before of like, we're going to separate this out into its own team, its own, group. They get to make their own rules and then realize like we did 5 years, 6, 7 years ago, you can't do that unless the people that do the infrastructure, the security, the plumbing, the compliance stuff kind of come along with you. So I think we might see a sort of a new rejiggering of that, but sort of, something old is new again kind of thing.
Everything comes back around.
That's right. That's right. You listen to the show long enough, and something from 6 or 7 years ago will come back around. Well, listen, man, want to thank everybody who listens to the show. We get a chance to be in people's ears for, like we said, 30 minutes, 60 minutes a week. We are thankful for that. We're thankful for everybody who, gives us some of that, who gives us feedback. We're thankful to, the people that we've met along the way. We've got a chance to meet a lot of really interesting people, and we don't take that for granted. So next year is year 13, man. Unlucky number 13. Hopefully it's not unlucky, but will be the 13th, I guess 13th year, maybe the 14th year. We started in 2011, but it's a lot of years. We're into our teenage years, if you will. So hopefully not too much puberty rubs off on the show, but we're going to be going through some growing, and that'll be good.
Yep.
That'll be good for 2024.
It'll be a year for changes as well, not just in the industry, but for the podcast. That's right. Yeah. But also too, like, I just have to say this real quick too. I'm glad I'm not the only one who can't remember how many years it's been.
I know. Well, I never know how to count.
I get confused all the time.
I never remember how you count. Do you count the first year, or do you just do the math backwards? I don't know. Math is hard. Simple math is hard. All right, folks. Thank you very much. Thanks for listening. Thanks for telling a friend. Thanks for helping us grow the show, and thanks for being part of the Cloudcast community. So for Aaron and I, for 2023, we're out. This will be the last show of the year, and we'll be back early part of January. So right after the new year, after your hangover is ended, your celebrations have ended, we will be back, and new shows for 2024. Thanks for listening. Talk to you next week.
Thank you for listening to the Cloudcast. Please visit thecloudcast.net to find more shows, show notes, videos, and everything social media.